Key U.S. indexes notched the biggest weekly drop in 2023 amid a major sell-off in risky assets. Nevertheless, today Wall Street is likely to kick off the new trading week with gains, although the prospects for a policy rate peak in the United States are still vague. The InstaForex team is ready to tell you about market sentiment, news releases, and important events of the early week. This is a fresh review of the US market. Stay tuned. On a Friday, the US stock market was wound down by data on consumer spending and income. Another evidence of the US economic stability dragged major US indexes lower. Thus, the Dow Jones closed sharply lower on a Friday. For the blue chip index, an impressive 3% fall was its biggest weekly decline since September. It was also the Dow's fourth consecutive weekly decline and its longest losing streak in almost 10 months. The rest of the top indexes followed suit, with the Nasdaq dropping by 3.3% and the S&P 500 sliding by 2.7%. Wall Street is on track to kick off the new week with gains. The three indexes are expected to add 0.6 and 0.9% in value. The S&P 500 is forecast to trade in an intraday corridor between 3,970 and 4,060 points. After a strong January, stocks have retreated this month as a slew of economic data fueled fears that the US central bank might have to keep rates higher for longer. Friday's statistics showed that the personal consumption expenditures price index, the Fed's preferred inflation gauge, jumped by 0.6% last month after rising by 0.2% in December. Consumer spending, which accounts for more than two-thirds of the US economic activity, soared by 1.8% in January, beating forecast for a 1.3% rise. Against this background, 9 of the 11 sectors S&P were down, with the real estate, technology, and consumer services suffering the heaviest losses. Communication services fell by 1.4%, marking its sixth straight dive. Mega-cap stocks including Tesla, Amazon, and Nvidia slid by 1.6% to 2.6% as the Treasury yields soared. Shares of Boeing dropped by 4.8% after the Federal Aviation Administration said the aircraft maker had temporarily halted deliveries of its 787 Dreamliner jets. Adobe stocks lost 7.6% on reports that the US Department of Justice would block the Photoshop maker's $20 billion bid for cloud-based designer platform Figma. The drop in the company's shares was the most significant since September 15. Meanwhile, investor sentiment on Wall Street has improved today. However, the market remains under pressure from uncertainty about a new interest rate peak in the United States. The implied federal funds target rate is now 5.42% by July, some 75 basis points higher than at the present, and futures market pencil in rates as high as 5.30% at the end of the year. However, traders seem to be tired of fear and anxiety over the Fed's hawkish tilt last week and have shifted the focus to corporate news and up-to-date statistics. Shares of Tesla rallied by 2.6% after the electric automaker said that its plant in Brandenburg near Berlin was producing 4,000 cars a week, 3 weeks ahead of a schedule on their recent production plan. Warren Buffett's Berkshire Hathaway posted its highest ever annual operating profit, even as foreign currency losses and higher rates pushed its earnings down in the fourth quarter. Seagen's stock added 14.6% after the Wall Street Journal reported that Pfizer was in talks to acquire the biotech firm. Pfizer's shares fell by 1.1%. Shares of the U.S. railroad operator Union Pacific surged by 9.3% after CEO Lance Fritz announced that he would step down. Today's macroeconomic calendar includes data on durable goods, which may boost shaky optimism in the United States stock market. On a monthly basis, U.S. durable goods orders plunged by 4.5% in January after surging by 5.1% in December, and the future was almost in line with the analyst forecast of a 4% decline, driven by a 13.3% drop in orders for transportation equipment, namely non-defense aircraft and its parts. Durable goods orders excluding transportation rose by 0.7%. Also, after last week's hawkish comments from Fed policymakers, investors will take notice of the Fed Governor Philip Jefferson's speech to be delivered later today. Last but not least, the BIS, Dubit, the bank for central bank, said it was vital for the authorities not to repeat the stop-start cycles of the 1970s when interest rates had to be raised to painfully high levels after attempts to lower them led to an inflation surge. It cautions attitude designed to make sure that one is not declaring victory too early is the appropriate one, the head of the BIS said in a statement. Such a stance could dampen risk appetite at the beginning of the week. In the forex market, the US dollar index continues to advance. Last week, USDX increased by 1% and hit a new weekly high. February could prove to be the best month for the US dollar after 4 straight months of losses. Intraday, the US dollar index retreated from the level of 105.30 and moved down by 0.10% to 105.10. Today, the intraday corridor for the index is defined between 104.50 and 105.30. On a Monday, the US dollar stepped back from the 7-week high as the upward momentum triggered by strong macroeconomic data began to fade. Assets began to look for new balancing points amid a steady state of the economy and continuously persistent inflation. Friday's data showed that US consumer spending increased sharply alongside inflation. The Fed funds futures market now expects the US regulator to increase interest rates to 5.4% by summer. In early February, market participants predicted interest rates to peak at only 4.9%, while interest rates are rallying overall. The core inflation's uptrend remains unbroken, which only increases expectations of a continuing monetary policy tightening. Traders no longer doubt that their path to the Fed's inflation target of 2% will be rocky, and it could still be painful for the economy. The president of the Federal Reserve Bank of Cleveland, Loretta Masters, said on Friday that the Fed must raise interest rates even higher to bring inflation fully under control if necessary. Investors will get more information about the state of the global economy this week. On Wednesday and Friday, the ISM Manufacturing and Services PMI for February will be released respectively. However, the USDX is not only pushed up by strong macroeconomic data. Dollar outflows at the end of the month after a strong performance in February could put pressure on the US dollar index. The Canadian dollar is also recovering after a massive sell-off on Friday. USD CAD remained rather muted during today's session, losing 0.08% and hovering near 1.3596. The trading corridor for the pair is seen between 1.3540 and 1.3640. According to a report by Canada's Finance Department, the country recorded a budget deficit of $4.06 billion for the first 9 months of a fiscal year 2022-23. The deficit was caused by increased debt associated with the high inflation and interest rates. Revenues increased by 11.4% since the beginning of the year, thanks to an overall improvement in income streams. Expenditures fell by 12.3%, mainly due to a reduction in the budget support received by businesses and citizens during the pandemic. Public debt charges rose by 38.4% this fiscal year, preliminarily reflecting higher interest rates. This week, traders will evaluate fresh Canadian GDP data. Until then, the loonie may enjoy a slight recovery as the pressure from the US dollar eases. Meanwhile, crude oil prices do not allow the Canadian dollar to fully recover. Brent crude futures decreased by 0.4% to $82.82 per barrel during the day, while WTI crude futures went down by 0.5%. In the cryptocurrency market, Bitcoin has managed to recoup some losses it sustained on a Friday. BTC continued to decrease on Monday and slid down by 0.7%, but traded near $23,389. Major altcoins such as the Ethereum, Solana, Ripple and Litecoin are declined and lost between 0.5 and 2.3%. At the G20 meeting in India, both the IMF and the United States supported the call for cryptocurrency regulation after several days of discussion. India said it wanted a collective global effort to tackle problems posed by cryptocurrencies such as Bitcoin, and the country's finance ministry held a seminar for G20 member states to discuss how to come up with a common framework. U.S. Treasury Secretary Janet Yellen said that it was critical to create a strong regulatory framework, but added that the United States has not proposed any outright bans on crypto. She insisted that the U.S. wanted to create a robust legal framework for market regulation. Over the past 24 hours, the digital currency has gained 1.08%. The asset is currently facing resistance at $23,500, while its closest support level remains at $22,800. If BTC breaks below that level, Bitcoin would end up in the next support area of $22,150. However, BTC has entered oversold territory and it could bounce upwards. If Bitcoin breaks through the resistance at $23,500, it could potentially rise to $24,200. This is how analysts at InstaForex see the situation in the US market on Monday. We wish you good luck and profitable trades. Until next time, see you tomorrow.